It's been a phenomenal year, obviously up about 27-28% on the S&P 500. I think technology, the discretionary stocks, financials, they've kind of led the way. Are we going to get that same kind of leadership from them in 2020?
I think as you look out into 2020, I'm expecting broad-based leadership, and really it goes back to being a stock picker's market. As we pointed out, the market has had a tremendous year this year. We've seen gains in a lot of places, largely because we came off of a horrible December a year ago, and people thought things were falling apart. We've realized that isn't the case. We've got tailwinds now, a lot of optimism over the overhang of China trade going away. We've got phase one here almost completed. What's next? I think people are looking at it as an election year, thinking subconsciously there's going to be a lot of support for the economy. It works for everyone, and that's going to be a positive for businesses. I think start to look for specific examples, companies with individual catalysts. I think it goes back to a stock picker's market because you do need to start getting choosy.
Katie, we heard Mike Regan there talk about cattle futures. You're cross-asset now, so what's sentiment like on cattle from your perspective?
Cattle, I haven't talked to a lot of people about it yet. Still sticking to bonds until January 2nd.
All right, then we'll ask you. The
dollar, right?
I do talk to people about
and
the
everyone's
dollar.
calling for the dollar to weaken in 2020. It feels
That's
like
what
at least.
It feels like, yeah. I actually put up a roundup this week about the big banks' calls, and it's weaker dollar across the board, but it's more measured than it was in 2019. Of course, the call going into this year was for a weaker dollar. So it feels like banks are taking a more modest approach this next year, only calling for modest dollar weakness, nothing close to a bear market.
Well, it does feel like there's a lot of these consensus calls, and part of them seem to be that a lot of these long-standing trends, Susan, are expected to break in some way, whether it's international versus U.S., ongoing strength for value relative growth, weakness in the dollar. But could we just have another year where it's more of the same, a really killer year for U.S. stocks and everyone else is sort of like, eh?
Isn't that a theme that we've had? It was lower for longer. It took a long time for people to realize that interest rates were going to stay low for a long time. Now, it's really taken a long time, I think, for people to get the message that the Fed has been, I think, very clear at sending, we're on pause. We're here to support the economy, but we're on pause for now. And so I think this could stretch out, and you could see another year. Again, we've got tailwinds behind us. We've got reasons for things to stay in good shape for longer than people expect. And we're always anxious to look for the next disaster. It may not be approaching quite that quickly.
Katie, the folks you're talking to, are they concerned at all about this idea that maybe the fundamentals for the individual companies out there might not necessarily be keeping pace with sort of the broader macro view? When you look at profit forecasts now for the S&P 500, I mean, they're high, but they're not necessarily in line necessarily with where we are in the market right now.
Yeah, I haven't heard a lot of that. It's mostly just what Susan was saying, that people are so desperate to get this year over, and then they're going to think about 2020. But I think there's still a lot of optimism for the individual companies, and there's more gains to be had.
Now, one sector, Susan, I know you're keeping an eye on is healthcare. And I bring that up because there's a lot of political risk embedded in that sector, especially since a court ruled that the Obamacare individual mandate to buy insurance is unconstitutional. Could we see the unraveling or the remaking, the reshifting of the healthcare sector in 2020? Or is that too soon because there's going to be a lot of debating and battling first?
Well, there will be debating and battling, but healthcare is a sector to keep your eye on. Energy is another sector to keep your eye on. And not so much because we're going to see imminent change in either of those areas, but because they're avid topics of conversation for politicians trying to get into office. And so you're going to hear sound bites that are going to cause that knee-jerk reaction in the market. We don't know how this is going to all shake out, but we do know that that's a rallying point for politicians. We're in an election year. Expect some shots across the bow. We're going to see volatility because of that.
Katie, one of the big themes that people are expecting globally is this sort of idea of a handoff from monetary to fiscal stimulus. We might be starting to see the signs of that in the UK, where they're rolling out the post-Brexit plan, and that includes more infrastructure spending. Are people kind of watching that, watching the UK, watching the effectiveness of that as sort of like a laboratory for policy and market reactions elsewhere around the world?
Absolutely. I mean, in some of my conversations in this past week, actually, people have suggested to me that they're thinking about shorting gilts because of that theme, that, we might see that handoff to fiscal stimulus. But it's interesting. I mean, supply in the U.S., that was, the big boogeyman in bond markets, that yields were going to spike because we were going to see, so much supply. And that really hasn't happened. So it'll be interesting to see if that story plays out in the UK.
When you look around the world, is there another market outside of the U.S. that really gets your attention, that perhaps will show the strongest of the catch-up gains that we're expected to get?
Well, I think the catch-up gains happen, again, individual stories, individual companies. And when I look around the world, I really am looking for businesses that have some international reach to them. I do think that we have some very strong businesses that have international reach based in Europe that have been overly penalized in the valuation. But I still like the U.S. as my safety market, where I feel very comfortable with the accounting. I think that I've got a lot of concern more about what's going on globally on politics in the rest of the world. Granted, we've got a lot of noise here, but business has withstood that very well, and I feel comfortable here going forward for 2020.